Welcome back. President Trump and Federal Reserve Chairman Jay Powell clashing on camera yesterday during the president's tour of the Federal Reserve's renovation site. It was quite a moment. The president called out a massive cost overrun as well. Watch this.
We're taking a look, and it looks like it's about $3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
Yeah, it just came out.
Our notes had it about 3.1 as well.
3.1,
3.2.
This came from us?
Yes. I don't know who does that.
You're including the Martin renovation. You just added
entire capital.
Yeah, you just added in a third building is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
It's part of the overall work.
Joining me now is Andersen Capital Manager and Chief Investment Officer Peter Andersen. Peter, that was something. How your reaction?
Boy, I haven't seen that ever, and the chair seems to be stuck between a spotlight and a spreadsheet in that case, and it's quite a candid moment. I don't know if it's more theatrical than it is taking away meaning. You know, when you're looking at stocks and interest rates, I'm not sure I would factor that in, but it certainly was an entertaining, if not cringeworthy moment.
I mean, that's going to be an SNL skit. I'm pretty sure of it. That was
I think
with the hard hats and everything. I mean, it was pretty funny, actually.
Yes.
The president also continues to turn up the heat on Chairman Powell over interest rates, pushing for aggressive cuts, even though the Fed is expected to hold rates steady at next week's meeting, the July meeting. President Trump has made it clear that he has a few names in mind to replace Powell once his term is up in May of next year. Watch.
Because to do that is a big move, and I just don't think it's necessary. And I believe that he's going to do the right thing. I believe that the chairman is going to do the right thing. I mean, it may be a little too late, as the expression goes, but I believe he's going to do the right thing. Yeah, it never helps it if it's high. Never helps it. We should have the lowest interest rate. And if you took it down 3 points, not a little bit, but 3 points, if you got us down to 1, we would save more than $1 trillion.
Do you have a name in mind to replace the chairman?
I do.
Or one person?
2 people, maybe 3.
Yeah, and we think that those 2 people are Kevin Hassett and Kevin Warsh, a former Fed governor. Peter, any thoughts on who would replace Jay Powell once his term is up in May?
I think Warsh would probably be the best bet. But, you know, it's interesting, Maria. You know, the Fed has always said it doesn't do politics. And who is it kidding? I mean, we know historically that the Fed will make a statement and then rush back to its terminal to see how the markets have reacted. So if that isn't political, I don't know what is. And so I think that the difference this time is that this president is actually bringing into sunlight what I think most presidents have gone through with past Fed chairs. It's just that they haven't been publicized this much. So in one aspect, I think it's somewhat enlightening for the general public to see that this is the kind of banter that has been going on. It's just this time we see it much more clearly in President Trump's view.
Well, what do you make of rates, which are higher this morning? I mean, the Fed, the president is calling for a cut in rates. Meanwhile, the yield on the 10-year is up 2 basis points right now.
Well, I think what people are forgetting is that the only power the Fed does have is the short end of the yield curve. So it doesn't necessarily mean whatever the Fed tinkers at that end doesn't always guarantee the 10-year, which the mortgage rates trigger off, if the 10-year is going to follow. And I think we're seeing that right now, that all the Fed can do is manipulate the short-term interest rates with the hope, and most historically it does happen this way, that the 10-year will move in sympathy with that. But it isn't always the case, as we're seeing now. So the very limited in what he can do. And the other thing I wanted to mention is, you know, when Mr. Trump says 3 percentage points, I mean, that is an enormous cut. I don't think historically we've ever seen that in a short period. So I think he's thinking more from a real estate lens than he is from, say, steady employment and low inflation. But we'll see how that plays out.
So, Peter, what do you want to do with stocks here for the rest of the year? I mean, this melt-up continues, more record highs this morning with the S&P and the NASDAQ, even if the NASDAQ's pulling back from an all-time high reached yesterday. Would you buy stocks here?
Yes, and I'm glad we're talking about stocks because it is the most important thing. That's why we're on here. And so look at what's been happening. You know, a lot of good things. Earnings were projected to grow at 5%, but they're actually growing at 10%. And we know that all else ignored, earnings growth drives stock prices. And so if we're seeing earnings growth surprisingly higher, that means you should be buying, in our opinion, you should be buying stocks. And I do think the end of this year, when all this dust settles, when the Fed is, you know, this issue of the Fed is resolved or maybe just put in the background, we will see the S&P higher.
All right. We will leave it there. Great to see you, Peter. Thanks so much.
You're welcome.
Peter Andersen. Quick break, and then the DOJ